On today's episode, we're going to take a look at what happened in the overall market today. So we're going to take a look at airline stocks. We're going to take a look at banking stocks, Tesla, and Starbucks. After that, we're going to take a look at companies that are reporting earnings tomorrow. They're going to be Adobe, Lululemon, and Dave & Buster's. So let's get started. The first thing we're going to take a look at is airline stocks, and we can see here they are down big today. United Airlines, for example, is down 11% for the day and then is up 1% after hours. Yesterday, airline stocks were also down after a huge rally that we had later last week. It was actually late last week because I remember United Airlines was up almost 40% in one day, and that was pretty crazy. Here we can see another airline, Spirits. They're down 14% for the day, and after hours they're down an extra 1 to 2% down. So what's actually driving these stock prices to go down for the airlines? The first reason why airline stocks are down right now is there was a JP Morgan analyst, Jamie Baker, who gave 4 reasons why the current prices and why there should be a form of bearish sentiment for airlines. And the 4 reasons are going to be here. I'm just going to explain them real quick to you guys. The first one is, yes, we did see a big movement of an increase, an improvement to say, of airline travels right now, especially since summer is coming. And the main way we can see the increase in travel is just by the amount of people going through TSA checkpoints. When everything was going bad in the airlines, it dropped to a bottom of about 97,000 people doing TSA checkout per day. And on our most recent Sunday, it actually hit an 11-week high of about 440,000 people that just went through TSA checkpoint, right? So this is a big reason why stock prices on the airlines have gone up, right? We're seeing that huge demand increasing. Well, this analyst says that, hey, this is expected right now because, right, a lot of people right now are just tired of being home, so they're having more of a I want to get away and want to get into air and just travel right now. But he does believe that when things start to come in the fall, there is going to be a slowdown as, for example, more people there's less summer vacation happening, people are going back to work, and this whole pent-up feeling of having to go outside is going to start to loosen up. The second reason he gives is valuation has just gone up dramatically. Like I said, there was one day where United Airlines has gone up about 41%. And this to me is one that I might agree a bit with, especially because, right, we have airline companies, and actually some of the things I'm going to mention are going to be here. But airline companies, the CEOs themselves have mentioned that the airline companies that were pre-COVID-19 are not going to exist until about 2 or 3 years from now. And so why would a company, right, why would the stock price of an airlines go back to pre-COVID-19 when pre-COVID-19 airline company is not going to be the same until about 2-3 years ago? So right now they're saying that valuations are a little bit too high. The third reason is, right, a lot of these airlines did receive some form of help from the government. And this is true, right? So but the government did say that this was going to be a one-time thing, especially for the airline industry. And again, many CEOs of airline industry believe that there isn't going to be some other form of help to airline companies. So if things continue to go bad, the way airlines are going to be, or the way any company actually builds up cash, is by selling their stocks, by doing stock offerings, and this is gonna dilute the amount of shares for current shareholders, and obviously that reduces the overall position of a company. And the final fourth reason, again, has to go back with the aid given to them by governments, is most of these government aids and their contracts where they're supposed to keep employees until late October is gonna end eventually. And when those things end, and if airline travel still continues to go down, he believes that there's gonna be an increase of airline employees being furloughed or let go, reduction of flights, reduction of travel. So it's like I mentioned, right? These airline companies are not gonna end up going back to where they were pre-COVID-19 anytime soon. And this is not me being bearish to the United Airlines. This is actually me just saying what some other CEOs of airline industries have said in their past earnings call. And before we go any further, guys, don't forget to subscribe, hit the thumbs up, and hit the bell. It helps the small channel out so much, and I truly appreciate all the support I'm getting from you guys. Second, if you guys ever want to get in contact with me, I'm very active in Twitter. I also have my own Discord channel. All the information is below, and you guys feel free to join, right? I'm not charging you guys for any of this. These are all my thoughts. At the same time, I'm not a professional, and none of this is advice. Also, on the comments below, I'm actually thinking of starting an introduction series on how to invest, and just do very small 5 to 6 minute videos and just create a library from there for people that want to get into investing. Let me know if that's something you guys want to see in the comments below. All right, so the second thing we're going to take a look at is banking companies. We see Wells Fargo was trending, it's down 9%, and after hours is another 2%. If we take a look at Bank of America, for example, it's down 6% and almost down 1% after hours. JP Morgan down 4%, and after hours is down another close to 1%. Goldman Sachs, same thing, right? Down about 2% for the day, and down 0.25% after hours. So the main thing that's happening here is, I don't know if you guys have been familiar with the bank, with their previous earnings. And if this is your first time to my channel, normally I do a full in-depth analysis on companies. Right now, I'm starting to do more of a daily news series as well before I get to do a in-depth analysis of a company, just to understand what's going on around the market. But like I mentioned, I do a full in-depth analysis, and my previous one was GameStop earnings, and the day before that I actually did Activision versus EA Games, so definitely check those videos out. But like I mentioned, previous quarter, a lot of banking companies took a big hit in earnings per share, and there were two reasons why banking companies took a big hit in the past recent quarter. The first thing is, most of the banks make money from interest rates, right? So when you take out a loan from the bank, the higher the interest rates, the more money they make. Right now, with the Fed today mentioning that they have no intentions of raising the interest rate anytime soon, it means that banking companies are not going to make as much money as they did about a year ago, because rates are a lot lower now. So that's the first reason. The second reason a lot of these banking companies took a big hit this past quarter is when a banking gives out a loan, they have some form of algorithm that determines, hey, how much percentage of those loans are gonna default or not gonna be paid, or however. So some of these loans, the company ends up losing money. Out of the whole majority, they obviously end up making money on loans, because that's why they give loans. But there's always a small percentage of money that they end up losing from loans. Now, because just the overall world economy, people losing jobs, in the previous quarter, they increased the amount of protection. You would say of protection from loans defaulting, and they put all these earnings into some form of extra protection fund, which would be the easiest way to describe it. All right, so now that we understand that, the second reason why these companies are down is the CFO of Wells Fargo's actually came out today, and they said that they're gonna increase that loan loss reserve amount. And when you increase that, you actually end up taking money out of earnings per share for the bank accounts. And if Wells Fargo's is doing it, then this is something that we're gonna continue to see in all the other banking stocks. So that's another main reason why banking stocks are down right now. But overall, they are pretty high from the bottom of where it peaked. But like I said, the two reasons is, one, we have that lower interest rates right now, and the second reason is that increase in loan loss reserves that these banks are going to start to build up. And there was a huge buildup this previous quarter, like I mentioned, on their past earnings. So now they're saying they're going to increase it even more. It kind of gives more of a bearish sentiment to the overall market, because it's saying, hey, we know people are losing jobs. People are not going to be able to pay us back right now. And this in the long term is just going to trickle down into some form of bad economics, and that's where I feel a lot of bearish sentiment is coming from. All right, the next company we're going to take a look at is Tesla. This company is up 9% for the day. I don't know if this company has seen a red day in the past month or anything, but it's now sitting over $1,000. And the main reason is Elon Musk today emailed his employees saying that employees should start right now focusing on the production of the semi trucks. There's still no date given on where the semi truck is gonna come out, and obviously right now, I think right now the truck is about 2 years late from when it was scheduled. But still, right now with the whole Nikola rivalry going on, so Tesla is up 9%. And actually, let's take a look at how Nikola did for the day. I think it's down. Yes, it's down 18%, but this company has gone crazy in the past 5 days. Look, even after this 18% up, its drop is still up over 90%. All right, the next company we're gonna take a look at is Starbucks. And Starbucks, if we compare it to February 20th, has actually declined about 10% from its February 20th value. And this actually makes sense, right? Starbucks, a lot of their stores were closed during COVID-19, especially in China, right? China was supposed to be a huge growth for Starbucks. This is where they were anticipating strong growth, but due to the whole COVID-19, there was a slowdown for them over there. So I understand why this company is nowhere near its February 20th level. Like I said, it's down about 10% right now, and after hours is down 4%. The main reason why this company is down 4% is Starbucks mentioned that they're gonna close about 400 of their stores. They're also saying that they're seeing about a revenue cut of $3.2 billion for the current quarter due to COVID-19. And you might be like, hey, Jose, why are they closing these stores? And how is that, and why are they closing so many? So the main reason they're closing the stores is because they're planning to end up shifting their models for more of a takeout only type place, or a pickup only, where right now they're more of like a restaurant you can come and sit, where eventually they want to do more of a delivery takeout service. And to me, that's actually a very, very bullish. I consider that a bit bullish and also at the same time bearish, right? Because when you think of Starbucks, you think of a place that, hey, you want to go sit down. I'm not a coffee drinker, especially I don't even drink Starbucks, but I'm not a coffee drinker. But when I think of Starbucks, I think of a place that, hey, I want to go sit down, enjoy a nice cup of coffee, enjoy some of their treats. So I can see why this can kind of be pushing away from the type of company they are, and I can see why certain investors might see it as a bearish thing. I can also see the bullish aspect of it, right? I mean, with now more closes this is going to increase speed, productivity of Starbucks, and it's going to increase just the overall efficiency. They're going to reduce costs most likely by having less stores, or the square footage of stores. So I can see both the bearish and bullish sentiment of it. The only thing is, I feel like it's kind of breaking away from Starbucks brand, and I do think a brand is an important thing of a company. And like I said, even for me as a non-coffee drinker, if I think of Starbucks, my brand is a place I can go and just sit down and enjoy a nice cup of coffee. All right, so now let's take a look at companies reporting earnings. Today, there weren't any real companies that I really was excited about. So that's why I don't know what I'm gonna do my video on today. Maybe I might do AMC Entertainment. They did report yesterday, and I think they are up big. But today there was nothing. Tomorrow, I am pretty happy with the companies reporting. There are some cool ones. We have Adobe, we have Lululemon, and we have Dave & Buster's. Out of those three, let me know which one you guys prefer, which one you guys want me to do. Let me know in the comments. I think I really want to do Adobe and maybe Lululemon. I feel like a lot of the viewers do like Lulu, so I might end up doing that. But let me know in the comments which one you guys prefer for me to do first. All right, so now let me just take a quick look at these companies reporting earnings tomorrow. The first thing is Adobe, and I want to compare it to February 20th because that's pretty much when the market really started to tank. This company right now compared to February 20th is only up 7%, and this is actually pretty crazy, right? I would have expected a software company like this to be up a lot higher. If we take a look at what's expected for their earnings here in Seeking Alpha, we can see that they are expected to show a 15% year-to-year growth on revenue, and that's actually again, I can see now why it's only a 7% increase. 15%, it is pretty strong. It's a nice grower, but it's not the typical growth that we have seen in software companies. But at the same time, Adobe is one of those big guys who has a market cap of close to $200 billion. Next, let's take a look at Lululemon. This company since February 20th is up about 23%. This to me was actually a surprise, but I guess more people are buying comfortable athletic wear while they're working from home. I don't see, I guess I'm not a fan. not that I'm not a fan, I just can't see why this company is up 23%. But if we take a look at revenue growth, actually, there is no revenue growth. This company is expected to actually show a decrease of revenue by 11% compared to same time last year. So like I mentioned, that's for me, I find it a bit weird why it's up about 20% from February 20th. Maybe you guys can let me know in the comments. Maybe I'm not seeing something. And right, I'm just doing a quick overview look right now. Obviously, when I do a full depth analysis, I'm going to take a lot deeper look into what the company and why it's up so much. The final company is going to be Dave & Buster's, and this company right now is down 10% for the day, and compared to February 20th, this company has lost about 60% of its total value, actually closer to 62. And this actually makes sense, right? Dave & Buster's is a restaurant, but not only a restaurant, it's also more of a Chuck E. Cheese for kids, where you have arcades where you go play. And I do think this is one of those few companies that once things open up is going to be the last place people are going to go, right? Especially with all the arcades, people are always touching something. So I feel like people are going to more likely go to something where they are not going to touch the same thing that everybody else in that restaurant touched. So for me, Dave & Buster's out of these three is the one I'm a little bit more bearish on. And for this company is expected to see a revenue decrease of about 54% year to year. So that's it, guys. I hope you guys enjoyed today's episode. Like always, make sure to subscribe, hit the thumbs up and the bell. It helps the small channel out so much, and I truly appreciate the support. Take care, guys, and see you next time.